Yes. Okay, we're doing this. So people have joined us a little late. We had just started with a small exercise of introducing a person to our left or right. At this point, I was not sure what I said, but yeah. Okay, I'm going to start here with Sohail. Sohail works with Oxfam here in Bangkok, and he works with Oxfam GB and is in charge of project management overall, I think. Yeah.
Thank you. It's great to be here. And I'm supposed to introduce you, right? So Shristi Anand, she's our moderator for the day, and she works with Global Alliance Against Traffic in Women.
Hi, so I'm supposed to introduce you both, right? So this is Ong.
Why don't you stand so that we can all see you?
Yes. So this is Ong and Leslie, and they work here. They're interns at the UN OHAR. Yeah. And we were just chatting about, the different areas. They work on Myanmar and the economic situation and how all of that is impacted. Fascinating stuff.
Okay, we'll hear more from you then.
Hi, this is Sarah. And hi, everybody. So this is Sarah. She works with the organizers of the session, FTCC, for a coalition or an organization that's based in India. So, I'm quite close. Yeah.
Oh, please introduce Kyle. Kyle, please introduce yourself.
We didn't get to talk because I was organizing. So I'm Kyle with Fair Finance Asia. We're one of the co-organizers.
Can you pass it?
No, I already got it.
Okay.
So am I supposed to introduce myself or my colleagues? My colleagues. Okay. So he is Duang Chan Lopaying, program coordinator for Fair Finance Asia based in Vientiane. He is informing me that this is the second phase of your project, but in Laos is the first phase. So that's new information for me. But yeah, nice to meet you.
Okay, thank you. So I introduce my colleague here. His name is Monirun Islam. He is the secretary and the Prime Minister Office of Government of the People Republic of Bangladesh. So it's very nice to meet the very high person in the Prime Minister Office here. And just know that all the SDG is under his coordination and cooperation department. Yeah, thank you.
Thank you. I also met with him. His introduction has been already given. So he works for the Oxfam, and she Ratchada Arno Ponsilp. She is a Thai working for Raoul Wallenberg Institute and deals with the human rights in something issues. Thank you.
Hello. So I had the pleasure to talk with Ari, who works with UNDP Mongolia. Right, just correct me if anything's wrong. As a business and human rights analyst, so she already brings some experience in terms of responsible business conduct and human rights due diligence in business. Thank you.
Okay. In turn, I would like to introduce Alex, who works for UN Women in Myanmar office, and then she works for the Women's Economic Empowerment and gender transformative issues, and also they want to include the human rights-based approach in her work. Yeah, thank you.
Okay, I would like to introduce Shri. Her name is Alexandra. She's a specialist of the UN Women Program in Myanmar. Yep.
Thank you. And I'll introduce Yeru. So she's the director of the Business Academy for the Mongolian Chamber of Commerce.
Yeah, good afternoon. My name is Putta Bandit. Yeah, I'm working on the human rights and international humanitarian law. Yeah.
Hello, my colleague here, Mr. Joseph Falcon. He's from Boston, USA, but he is currently based in Laos, and he's an independent consultant on sustainability and climate change. And he has a lot of experience in the region, being based or like having worked in a lot of countries like Bangladesh, Thailand, Myanmar, and the list goes on.
Okay, thank you. I would introduce Ms. Hamna. She's the manager of the Democratic Governance Portfolio for UNDP Maldives. And that includes human rights portfolio underneath her vast responsibilities in the Maldives. Thank you.
Sure. Sorry, I missed the introductions. I'm Priya Luca. I'm macroeconomist here with OHCHR, working on issues around fiscal space and social spending with a focus on human rights economy. Thank you.
This is my colleague Nabil. He works with me in the Democratic Governance Portfolio in UNDP Maldives. He currently works with the National Human Rights Commission on the work we do on human rights in the Maldives.
Good afternoon. So I will introduce you my new friend on my right, Loan Pham. She is based in Hanoi and she works for UNDP, right? And she's a human rights and inclusive governance analyst. Yes.
Thank you. So I also would like to introduce my friend next to me, she Nikita. She's from Indonesia and she based in Bangkok and she works for one manufacturing company. Yes.
And my another new friend, Valerie. She's based in Hong Kong, work in China Labor Bulletin. Yes. Okay. Thank you.
Hi, everybody. I'm happy to introduce Svetlana. She works with Article 19. She is the Asia Program Manager located in Thailand, based in Thailand. And Article 19 is an organization which is working in the space of media freedom, access to information, protecting journalists. So everything which is very essential and critical for the foundation of healthy democratic societies. Happy to introduce Svetlana.
Hi, everyone. Well, and also civil society and tech sector dialogue. Let me introduce you Han, right? He works at the UNDP Vietnam, focus on business and human rights portfolio, mainly on capacity building, working with the private sector, or he also works on the policy issues and, of course, the creation implementation of NAPS, which is now in the draft level right now in Vietnam. Hope to see ICT sector there.
Thank you. I would like to introduce Amas Kajum Razi. He's the Secretary General of HEP Science Center. The center focuses on sustainable resourcing and material, especially for the climate resilient crop in Malaysia.
Introduce the same person. Yeah, this is my colleague Kwan from UNDP Vietnam. Yeah. So he represent on upskilling the workforce on many of area of UNDP.
Okay. Thank you so much, everyone, for being so candid with us, and hope it was a good know your neighbor, know thy neighbor. Okay, we have two more people in the room who should introduce each other. I'm not going to do their introductions.
Sure. Thank you so much. This is a really nice way to get to know your co-panelists. So this is Matti Kohonen. He is the director for Financial Transparency Coalition, originally from Finland, but based in London. And what I know is that when he is not working on public finance issues, he's drinking at least 5 cups of coffee a day. And so hopefully you've had the full cup ready for this session, Matti.
thanks. I think I'm on my third cup, so I still have 2 more to go. And to my right is Bernadette Victoria. She's the director at Fair Finance Asia. And what I know about Bernadette is that her daughter loves drawing. So I think we'll be getting some drawing books going there. Thank you. So does my daughter.
Thank you so much. Okay, so we have a room to which the topic will definitely speak to. We have a good ASEAN representation. And before I get started, I have 2 housekeeping rules that I should probably get out of the way first. One is, if anyone is an English speaker, okay, there's no one on the table behind. I would suggest that no one should sit there because the translation is going on and it's really loud. So keep towards the front of the room. And for those who have joined us online, in the interpretation, there is a button called Chinese that is interpreting in Thai, not Chinese. So those were the 2. So to get started and discussing right-based economy, the intent of this conversation, we have 2 speakers here, and there is Professor Arun Kumar online with us. He's a retired professor, an economist who is meeting us from India today. And the intent of this discussion is to see how we can foster an enabling environment, especially when we are speaking about finance. And in finance, we want to speak both to public as well as private. As we all know, the economic policies that are in place and the regulations that are in place goes hand in hand with private fund. Private finance, private funds are almost like a quasi-public corporations these days, and increasingly becoming so. So some of the essential goods that we need, some of the public goods that we speak of today, whether it's water, electricity, which runs our day-to-day lives, may be linked with, those public goods are linked with private companies, bodies, money. And when we speak about finance and money, we also have to speak to debt management, the way taxation is happening, and so on. I also want to bring in a little bit of a larger context in which we are having this conversation today. We have colleagues from ASEAN and other regions as well, where we are seeing that there is a clampdown of human rights. And that it happens in many ways. One of the ways in which it happens is legislative amendments. Those play a key role in which law itself kind of generates an environment, and you're legally obligated not to do things. And that can also be used as a way to curb human rights of populations vulnerable or to be made vulnerable equally. We're also speaking to many countries in which women are not part of economy, or they are a very small part of the economy, the working economy. So these are some of the aspects that we want to cover today. So without further ado, I'm going to pass on the conversation to set the context a little bit more to Professor Arun Kumar, who is with us online. Professor Kumar, over to you to just give us a little bit more in-depth understanding of what we're talking of today. Thank you.
Okay. Thanks, Shrishti. And thanks to the organizers. And hello to everybody there. Very impressive set of people from international arena who have a lot of experience of this. My video seems to be giving a bit of problem. Seems to keep going on and off. So maybe I'll switch off the video if that's okay. Is that okay? Okay. So the first question that I ask is, why does the obvious not happen? Everybody agrees that rights should be there. And in India, we've been fighting for a variety of rights since the 1980s, whether it be right to employment, right to housing, right to information, and so on. We managed to get things introduced into the manifestos of various political parties as well. But 30 years or ahead, we can't say that we really achieved these things. So in a sense, something fundamental is not right, because of which it doesn't happen. I was also requested to speak in the context of the IFFs, and the IFFs consist of the international financial flows, and the illicit financial flows. So in a sense, both these affect the discussion on the rights, that we are talking about. And further, there are two aspects to the problem, the micro and the macro aspect. I'll try and address a little bit of both of them. But first, the macro aspect, because I believe that if the macro is not set right, then the micro also does not achieve its ends, because contradictions appear amongst the various things that we say. Now, when we talk about the IFF, basically we are referring to the global financial architecture. And this global financial architecture, what it does is it truncates the nation's sovereignty, especially in the developing world. And it's pushing for marketization. And what is marketization? I'll come back to that a little later. But what it is doing is it's preventing, especially when I think of India, from focusing on the requirement of the marginalized section. So this is an important thing in the context of the rights. Problem is that the local elite, who are the rulers, they actually want to join the global elite. And therefore, they become part of the exploitative system that marginalizes the local people. So it's the local elites that determine policy, and they do it in their own self-interest, and that they need to be influenced by us if we are to achieve rights in a systematic manner. Now, what is the impact of the illicit flows? The illicit flows subvert national policies, especially in the developing countries, because flight of capital results in shortage of capital for development in the developing countries. And often it has resulted in balance of payment difficulties. And when balance of payment difficulties come, we are forced to go to the International Monetary Fund, which imposes conditionalities that are not necessarily good for the rights of the people. This we've seen in Latin America and India since the 1960s. Now, to deal with the balance of payment difficulties, concessions have to be offered to international finance, and that therefore limits the scope of the national policy. And why is this happening, especially since the 80s? Because capital has become highly mobile. And with the mobility of capital, what happens is it is able to dominate and make nations fight with each other to attract capital. And to do that, the countries have to offer concessions. And one of the concessions that has been offered very often is weaken labor rights. And when the rights are truncated, it especially impacts the women and the marginalized sections of the population. So what is the process of marketization? It's based on the idea that market principles should apply in all spheres of life. And what are some of the principles that have got introduced as a result of the marketization? First is homo economicus, that is, all things are determined by economic interests. That marginalizes the social and the political issues. And that's why equity and equality are no more on the agenda. In the neoclassical public finance, we say about equity, but then we say nothing can be done, and therefore we need not address that issue. The second thing that comes under marketization is that we are all rational individuals, and the rationality is that we are profit maximizing individuals. Now that results in atomization of the individual, because we are all maximizing our welfare individually in this system. And that makes action more difficult. Whereas rights is a collective issue. So therefore it weakens the idea of rights. The third that is important is the dollar vote. As Samuelson said, the economy works on dollar vote. So if I have $1, I have one vote. If I have $1 million, I have 1 million votes. That marginalizes the marginal. So the more marginal you are to the market, the more you get marginalized. The fourth principle that's important in this context is consumer sovereignty. That is, the state and society should not intervene in individual choices. So what it does is, it says that, we need not intervene in what is happening in the economy. The economy will automatically adjust So therefore, in this philosophy, markets are objective and the state is subjective. So therefore, markets should advance while the state should retreat. So it becomes status quo, which leads to growing inequality and marginalization of the marginal. And this is something that's been happening in the world economy since the 1980s, where inequalities of all kinds have been growing. Now, I want to refer at this point to a few things about India, what we observe, that we have followed a policy of top-down development. And this has led to a very large unorganized sector in the Indian economy, where 94% of the workforce in the unorganized sector, working with low productivity and low incomes, only 6% of the workforce is in the organized sector. And this unorganized sector consists of women, it consists of farmers, it consists of large number of workers. So therefore, in a sense, what is happening is that women have been impacted the most. Their participation in the labor force is very small. Only 26% of the women are in the labor force. The rest are doing unpaid work, and that therefore marginalizes the women. Now, this is also happening because the unorganized sector is not measured in the GDP independently. So therefore, in the data, the unorganized sector gets invisibilized. And therefore, the government says the economy is doing well based on the organized sector data, and therefore policies need not address the issues of the unorganized sector. And that also marginalizes the women who are in large numbers in the unorganized sector. So in a sense, the market-based economy, where the state and the collective are to be in retreat, rights-based policies get marginalized. And rights become add-ons, like the idea of the safety net proposed by the World Bank in the 1980s is on top of the basic economic policies. Or now we're talking about the universal basic income. That's also not a basic change in the economic policies, but it's add-on. So these are actually palliative, but not solution to the basic problems that are confronting society and where the rights are not being given. So these policies are being designed so as to prevent social and political explosion. But we should recognize that these are really add-ons, that they don't naturally flow from the economic dynamic. So the rights have to be socially determined, and that requires a collective choice. But markets will not automatically grant them. And in a marketized economy, rights cannot be left to individuals' judgment, because marketized economy is based on consumer sovereignty, and therefore it will be status quo. So according to this, the collectivity should not intervene in market outcomes. And if the collectivity does not intervene in the market outcomes, then rights are not granted. But we are confronted by market failure, which requires intervention of the government, which is the collective, which is the will of the collective. But that gets weakened. So rights granted by collective basically go against the market principles. And society is taken to be subjective and the markets are taken as objective. This requires state to retreat, as I said earlier, while markets are supposed to dominate. Businesses guided by the markets will also not concede rights on their own. Further, business interests control state and undermine the rights. So governments controlled by international finance will not favor rights-based economy. They will follow marketization principles, and therefore gender issues will get marginalized. Unless there's social and political pressure, this will not happen. Financial structures will also not promote rights-based economy, so they have to be also affected. How do we do that? Because fiscal policies today are not suited to rights. They're based on supply-side policies and not demand-side policies, and they attempt to stimulate business via concession. And that, in the Indian context, and I think in many other countries, is based on indirect taxes or not direct taxes. And indirect taxes tend to be regressive, whereas direct taxes can be progressive, especially if you have wealth tax, estate duty, gift tax, and the income tax properly structured. But because of the large black economy or the underground economy, direct taxes get undermined. And therefore, what we do is, like in India, 11% of the tax revenue as a share of GDP comes from indirect taxes, and direct taxes only collect 6% of the total tax collection. So in the name of ease of doing business, what we do is we promote businesses and curtail rights. And then globally, we see that there's a race to the bottom and BEPS. These two have undermined the public funding of basics all over the world, including in India. So there's little attempt to tackle flight of capital and tax havens, though OECD and others have talked about BEPS, they've talked about flight of capital and tax havens, but that continues, that undermines national policies, as I said earlier. So rights need to be a fundamental part of the economic dynamics, not add-ons, and everyone eligible should have paid work and a living wage. The Indian Constitution promises workers a living wage, but it is not implemented. And employment should be the target of policy, not investment. Because when we do employment as a target, then we generate more employment. But if investment is the target of policy, then employment does not get generated. In a report that we produced recently on employment and unemployment, we showed that in India, 320 million have some kind of proper employment, but 280 million do not have proper employment. And out of that 190 million, especially women, have stopped looking for work. Now, in this context, we pointed out that technology is very important because technology is displacing labor at large level. So we have argued that technology should be introduced in a socially responsible manner so as not to create massive unemployment. And this is something that we need to consider if rights are to be granted. So markets should be subservient to the social requirements rather than dominate over the society. Now, to conclude, especially in the post-pandemic situation in India, we have further downgraded rights. Farmers' rights, rights of workers are sought to be truncated in the name of promoting businesses. Capital-intensive projects are being promoted, whereas labor-intensive projects are being curtailed, like the Rural Employment Guarantee Scheme, etc. We've seen during the pandemic that the need for education and health is very strong, but there's inadequacy. Unfortunately, the allocations to these areas have also been curtailed. This may also be happening in other countries. So for rights-based economy, there's no option but to check the marketization process globally and make markets more socially friendly and socially responsible. So there's much talk of rights, but they're systematically undermined over the years. At least in India, we see that since the basic needs to be changed. Unless the basics are changed, I don't think we'll be able to achieve rights except as add-on. And this requires political transformation, which means socio-political economic movements so as to make people more conscious so that they can demand their rights. So legislation will go up to a point, but unless the political consciousness of the public changes, rights will only be add-ons. Now, the task is very difficult, but it's worth trying. And we have proposed in our report on employment and unemployment what all needs to be done. It's a rather tall order, worth trying. Thank you very much for your patience.
Thank you. Thank you, Professor. And that was really nicely said, both in terms of macro and microeconomy. One of the things that you said, and I think that'll help us do a little bit more in our next session, which is that the financial structures and also the market should not be the ones which is dormant. It should be the collective and not the atomized individuals that should be the focus. So I'm going to take the next question to both Matty and Bernadette about how do we do this when we are speaking of financial actors as well as state? How do we make sure that rights are part of the architecture that is coming up with the market that is growing and evolving and becoming dominant player in the finance? So both of you, whoever would want to take it first.
Okay, I've either. Do you want to? Thank you so much. I think that's also thank you to Professor Arun for setting the scene on how we understand human rights-based economy and what kind of considerations there are. I'm speaking and coming a bit more on looking at the more private finance perspective and what their role is in providing capital financing specific sectors, projects that should be enabling for a human rights-based economy, or at least policies that should be implemented or considered in what we would consider a human rights-based economy. And so I think, just very short, and handing over to Matti, is that, of course, private finance, be it banks, financial institutions that include multilateral development banks, pension funds, it can be your insurance companies and whatnot. There are so many different entities of these international financial institutions providing cross-border investments and enabling a lot of businesses. Firstly, I think it's very important for them to comply to the highest possible standards of international human rights and human rights conventions. Of course, this is currently not mandatory. So a lot of these financial institutions have considered or taken into account these policies to be part of their own policies and their own in their own operations. But because it's not mandatory, it's not really possible to compare the performance, to track the progress, and to ensure that they have full responsibility to ensure engagement with the companies that are being provided finance, but still not doing proper due diligence in their business practices. Secondly, of course, it's important for these financial institutions to consider remedy, because there are already issues, for example, that have happened in their supply chain, issues surrounding human rights violations. So there should be access to remedy if those happened already. And of course, from the side of the financial regulation, they have a very important role, because as supervisors of these international financial institutions acting in a cross-border manner, they have a very critical role to put in place mandatory human rights due diligence regulations, for example. And how can that be done? It can be done by, for example, making it part of taxonomies that are being developed. Currently, we have sustainable finance taxonomies being developed, focusing heavily on environment, but not taking into account the social impacts, because environment and social issues are hardly a part of each other. So it's the same in supply chains, and it's the same in other areas of businesses. So I will stop there, because I think Matti also needs a turn to elaborate a bit more on the public finance side as well.
Yeah, so financial institutions, they're of course also taxpayers. So they provide public financing through taxes, but they play even a greater role in being the conduits of capital and financing. So in that respect, we really look at how they also are enablers or with facilitators of what are now called illicit financial flows. So are they also in their wealth management side hiding wealth, which should be reported to governments, revenue authorities, anti-corruption authorities, or other authorities that have a legitimate interest in personal wealth of individuals? And on the corporate side, are they transparent enough on how they report their activities on a country-by-country basis? And do they publish that country-by-country reporting? So these are some of the kind of ABCs of what we call financial transparency for the whole corporate sector, that we understand that the financial sector actors, they hold wealth, so that wealth need to be reported back to governments automatically. There needs to be beneficial ownership registries that are open to public. So if there's someone's a shareholder or exercises voting rights, that needs to be public, and that's now an international commitment. Governments in the SDGs have committed to reduce illicit financial flows, and the implementation of that actually looks into these public beneficial ownership registries as one of the ways. And then, like I said, country by country reporting of your taxes. Pay your taxes in the right place and the right amount at the right time. Yeah.
Thank you both. Taking from that, I would just want both of you to maybe focus a little bit on Asia as well. And the room is full of people who are working and are located out of Asia. And we're also looking at things that are happening right now, the recent human rights crisis that is everyone is calling the scandemic, which is basically the scams which are based on using technology, and there's definitely some evidence of illicit financial flows, but other kinds of flows as well that can completely topple a democracy in that sense. So when we are speaking of these macro events that are happening, how do we look and what are the opportunities available to people right now, both civil society as well as maybe individuals as well, to look closely at what are the policies that are in development, what are the gaps, and what are the things that are in works right now, regionally, as well as because ASEAN is also one of the regions that is in this area, but also nationally, if there's any reflection on those two.
Thank you so much. I think let me start by saying that Asia is certainly a region we always talk about as if it's one, homogenic, region, but in fact, it's very diverse. There is Southeast Asia, there's Northeast Asia, there is South Asia, and there's Central Asia. And in every sub-region, there are very unique contexts, there are very unique landscapes policy-wise, there are very, different issues and very different gaps. So firstly, of course, it's very important to have an international, coordination mechanisms, a common language when we speak about issues surrounding human rights. What does it mean across, or what does it mean for financial sector to, conduct due diligence, and that's why there's a very important role for policymakers to promote policy coordination, perhaps as mentioned through developing taxonomy. It doesn't have to cover the whole region, given that there are very different contexts, but at least some common indicators, some common language and definitions on how the social impacts or the social, responsibilities of the financial sector can be added in how we understand, sustainability moving forward. So I think the whole session, we really plan to discuss a bit more of, how we view the role of the financial sector in enabling a human rights-based economy, but also how they potentially are not enabling it in some way because of the gaps and the loopholes that we see. And in terms of those gaps, it's very clear from the studies that we have done as Fair Finance Asia. Of course, we look at very different sectors of economy, agriculture, infrastructure, even areas such as just energy transition. And in all these different topics, you will see that while financial sector has a very big role in financing projects and initiatives to enable businesses, to enable projects in these areas, there are many missing. So I know this is a very general topic. I'm struggling a bit how to focus the intervention, but I think maybe Matti also, you can talk a little bit more on the public finance side.
Sure. Maybe I'll go to the very concrete examples first when discussing the whole Asia Pacific region. And like you said, it's a very diverse region. We did a study during the pandemic on the use of the recovery funds during COVID-19. And in that study of recovery funds, we actually found that in our 21 study, we found that actually a majority of the funds went to the corporate sector in the form of tax incentives or loans or tax cuts that they received. And there were some countries who went into the pandemic thinking that you need to stimulate the economy through subsidizing or through cutting taxes to the corporates. And that actually happened in Sri Lanka. And today we know where Sri Lanka is in a debt crisis. That's partly because it was a fiscal crisis that preceded the debt crisis, where you needed to then bring more debt to balance your budget and try to do recovery work during the pandemic. We also saw that the overall recovery spending was vastly inadequate to mitigate the crisis. And this had also to do with the pre-existing economies we had going into the pandemic, which were not mobilizing adequate amounts of resources. So whether this was tax revenue or whether this was managing debt sustainability or international financing from public sources, there wasn't adequate amounts of that. So actually during the pandemic, many civil society movements that we work with and many of our members started to claim what's called a rights-based economy. And a rights-based economy is both having a vision and a lens of the economy from a human rights perspective, and really claiming that human rights not only apply to the obvious areas of public services, health, education, social protection, but human rights also apply in how we design economic policy, may it be tax policy, monetary policy, trade policy, and also in how we can use the state as an enabler to bringing about economies that serve human rights. So whether the economies around, food security, food sovereignty, economies that are based around the ideas of commons or well-being economies, feminist care economies, how those economies really surged in interest in our understanding of what an economy is. I mean, for instance, the huge role of the unpaid care and domestic work burden that women felt during the pandemic. Really during the pandemic, women's, that unpaid domestic and care work surged. And also then men and women, but especially men, noticed how when you take away the facility to have childcare or facility to have even domestic care, how when that's taken away, you really make more visible women's role in the economy. And the demands for a care economy and tackling the care gaps have really surged and really become quite interesting after the pandemic. And that calls for much more public financing. So we define the rights-based economy as a holistic understanding of human well-being, supported by the widely agreed frameworks and values of human rights. And that means to redistribute resources, remedy inequalities, and rebalance power. And that's already been started to use by the UN Human Rights Commission, both by the previous presidents, Michelle Bachelet and Karen Volker-Turk, in the Human Rights Economy Project. Glad to have colleagues from there, that unit here as well. Hopefully in the questions and answers, you can tell something about some of your approaches. And also CSOs, academia starting to use this more holistic framing. So we at the Financial Transparency Coalition see this as a way forward as for post-pandemic economies. And also then we bring our contribution to looking at tax and illicit financial flows in that context.
And two questions from everyone here. Anyone has any questions, comments too? Any addition anyone would like to make? Any thoughts on rights-based economy so far? Something from your experience that could be an add-on, would love to hear. Yeah.
How do you overcome the societal stereotypes, biases, which are so ingrained when we look at the gender roles or the gender norms that are prescribed, and overcome those barriers to have a right-based economy where all genders are having, let's say, equal opportunities or share?
Any other thoughts?
I think you can. Hi, thank you. I think it's a very similar question that was already posed. So it's just an add-on, maybe also in terms of, have you seen policies or ways that we can support financial institutions in becoming more gender smart and sort of supporting the bridging of the financial inclusion gap for women, but then also so everybody can have their rights equally fulfilled. Thank you.
At the moment.
Thank you very much. Well, I mean, being person working with tech sector, and actually I've been based in Myanmar big time and know the struggles on the financial sector and gender as well. I mean, not only cash flows, but also the access to devices. And based on that experience, there have been cases when QIC, know your client, which was like provided by the banks, being abused, and which actually kind of led the path to human rights violation and targeting certain people, targeting people based on their transactions and everything. And of course, I'm not aware about the gender study, how much, let's say, gender case there, but just asking experts here, perhaps could you recommend any remedies in this case, like how to, let's say, push back those financial actors, not to abuse KYC and not to lead to the human rights violation, and of course, gender side as well. Thank you.
Okay, I'll do the public side. So yeah, so I mean, to remedy gender inequalities that are produced in the economy, not only do we need normative shifts between all genders, especially men and women, on redistributing, revalorizing, recognizing unpaid domestic and care work, but it also needs resources, to have maternity pay, to have paternity pay, to have policies that support this cannot be just the burden of the company in question, but it should be also funded through collectivized social security policies, as well as social protection, especially for those who are in the informal sector who don't have access to social security provided by the employer. There should be also policies that universalize the care economy. And that's why it's important to, while we understand that initially it's often employment-based, social security-based interventions that start to build a care economy, universal care economies do require fiscal resources from general taxation and other public resources to then provide, whether it's childcare or maternity pay, maternity cover, or other aspects of care. Let's not forget elderly care as well. So those policies are critical. The norms have to shift first, but then the policy shift is both employer and public policy-based interventions. And then if I look at some of the financial inclusion issues, maybe you're talking about utilizing KYC in such ways that do about privacy or issue. Huh? Okay. Sorry.
And privacy, data protection, surveillance is another topic. Can talk about that hours.
Yeah.
Let's not go that direction. Well, the thing is that KYC is usually a recommendation form for the banks, right?
Yeah,
It's not the legal prescription of that you have to do that. But the banks sometimes take it. I mean, it's not like you're legally obliged to do the KYC. So, but the banks sometimes doing that in the way that, let's say they see a transaction, human rights, like let's say transaction from the organization, business and human rights institution, does the transaction per person. So it creates for them the red flag. Or transaction to one person to another one, which happens to be a human rights activist.
Oh, okay.
Or transaction, let's say, I don't know, some institution which might be politically connected, might be not, might be even UN organization connected. So, and they conduct this KYC based from the photo, fingerprints, and everything.
So yeah, so first of all, know your client KYC is a legal obligation under money laundering laws, and it should prescribe where does money laundering laws apply. Normally, it's large transactions. So it shouldn't apply because someone's a human rights activist. It should apply when the transaction is above a certain size that then is the threshold in that country for anti-money laundering laws, such as know your client checks to be done. And we advocate for know your client checks because that's one of the only ways to spot, large-scale illicit financial flows or large-scale criminal activity or tax abuse, tax dodging. So that's an important tool for banks to flag that. However, we don't think that bank self-regulation really works. We'd rather have authorities, competent authorities, to have access to some of that bank data when it's relevant, and for some data to be on public registries. So to have a public registry of owners of shares and those who exercise control, especially in high-risk sectors like extractives, is really important. It's not a tool. So clearly the tool in this case seems to be used for different purposes, which is the unintended purpose. You should also use the tool for politically exposed persons. So elected people, people in power should be checked for KYC, not human rights activists. So clearly the implementation has gone the wrong way. Yeah.
Thank you so much. I used to work in financial inclusion issues before this current work, and KYC is a very important step to promote financial inclusion, especially in contexts where you would have large parts of the population that cannot present identification information, and that's incredibly large, significant part of the world that don't even have IDs. So in those cases, financial institutions providing lending services and financial services have to find a way to identify their clients. If I understand your question correctly, perhaps the risk that you're trying to identify is the use of data provided. So knowing your clients, if there is a malicious intent from those financial institutions to identify them and know them in order to discriminate them, that relates to the way that their data and information are being used or collected for that purpose. So if the sole intent is to create, greater financial institution, which is the real intent of KYC, then the regulation would be slightly different. When you're trying to prevent malicious use of data collected through these Know Your Clients initiatives, then that is a different type of consumer protection, also regulation that needs to be, implemented. In many countries where we work with, especially here in Thailand, during the pandemic, our Fair Finance Coalition here in Thailand worked a lot on issues relating to the repayment of debt connected to the loss of jobs during the pandemic. And many of the financial institutions were, of course, collecting the money and the debt, despite people losing jobs, being out of jobs during the pandemic. And this was a very difficult time. And in really extreme cases, we gather that there was, a malicious use of such information of data to pressure people to repay the debt. And therefore, there was a call towards the financial institutions to, provide more intentional policies in order to ensure that the banks are not using such data for their clients to force them to pay, and to provide, more flexible ways to repay their debt because of, the pandemic. So that's one way to pressure the financial institution to take into account, for example, how to act and how to support humans when they are going through difficult issues. Perhaps that also links to the question of the lady at the back regarding financial inclusion and how, financial institutions can enable this environment. Over the last couple of decades, there's been a really good, movement around financial inclusion, especially in Asia. Mostly because there's been a lot of progress in terms of creating better regulations that enable more access, be it, creating more digital ways for access, creating, more innovative non-banking financial institutions to provide financial services. I come from the Philippines. You can actually bank using your jeweler, or these non-banking financial institutions that are also helping provide enable more financial inclusion is really important. But of course, in terms of the policies financial inclusion is also one of the indicators that we measure as part of the Fair Finance Guide methodology, how financial institutions do not only expand access, but how do they do it responsibly by promoting greater consumer protection, for example, including in cases that was mentioned previously about the use of data, but also, for example, providing more opportunities for financial literacy for people who would be clients, and how they would be able to maximize the use of a bank account or services, financial services that are tailored to their needs. And perhaps that also jumps a little bit to the question about the role of the financial institutions in promoting gender equality. financial inclusion is a very important topic for women specifically, because financial independence is a very important step for them to, reach a little bit more equal step in gender equality when they have, independence and access to their own money, to their own savings, and being able to spend that and use that for the purposes that they need in their lives. So in that case, financial inclusion for women has been a very important advocacy towards the financial institutions, towards financial regulatory bodies for many years to create that, especially in countries where, of course, women are marginalized and they are not even able to access the own income that they make for themselves. And so in that case, perhaps creating greater financial access for women would be a good way to create, more balance for gender equality, for women to be more independent. But also, as Matty mentioned, there's a big area called unpaid care work. Fair Finance Asia is part of Oxfam, and we do a lot of work, looking into unpaid care and how much a woman who is a stay-at-home mom who should actually be paid for the services that she's offering for care work for her young children, for her aging parents, for her whole family, so her husband can advance in his career. And it's a sizable amount. It should be similar to the husband, what the husband should be making if you compute that. And she doesn't take leaves. She doesn't have holidays. So if you compute that as well into the care work being provided by women, this is also very important. But how does that apply, for example, for businesses? So for example, we, as Fair Finance Asia, we look a lot at, for example, sectors like agribusiness. And in Asia, when you talk about agribusiness, you talk about the big businesses, you talk about the small holders. But there is also a very important, element there that we don't see, because when you only look at the big businesses, when you only look at the farmers, there is even an element of unpaid care work, because in small farms, work is shared. The farmer is counted as the male head of the family, but the woman is doing much of the work. She's feeding the chicken, she's taking care of the children. And again, this is another element that is not cared for. And so as Fair Finance Asia, we also try to create greater awareness for businesses to count these kinds of, to count these kind of considerations as part of their policies to create greater balance and equality as well. So I stop there.
Can I say something?
We were coming to you. Please add your 2 cents to this.
When we talk about inclusion in financial sense, what it also has implied in the Indian context is that the backward areas have been losing investment, because investment leaks out to the banking system to the more advanced area. So to give an example, Bihar is one of the most backward states of the country, and there the credit deposit ratio is half the all India average. And because it's half, what it implies is that the Bihar savings are very small, and half of those savings are going outside to the developed metropolitan area like Delhi, Bombay, etc. So A, they are saving less, and B, the investment is lower, so the backwardness gets further aggravated. So whenever we talk about inclusive policies, we also need to know how the financial systems themselves may actually result in further marginalization of the backward areas. Similarly, for women, when the transfers are made to women, what happens is that the men take away the income. So very often the people say that they should be given in kind rather than in cash, so that men cannot take away the money that the women get. So in a sense, when we talk about inclusion, what we need to do is we need to talk about the women's work. As has been already flagged, the unpaid work means that the women don't get counted. They don't get counted in the labor force. They don't get counted in terms of what they can do in life. And therefore, very importantly, what we flagged is that we need to generate more employment, especially at the lower levels. If we don't do that, then the women will not have incomes, which will make them independent. And therefore, in a sense, we need to focus on rural employment. And in India, we have the Rural Employment Guarantee Scheme, but we also need an urban employment guarantee scheme, so that women in the urban areas can also get work. Simultaneously, education and health need to be focused on, because when education and health are given full priority, then that enables the girls to come up and to be able to get better jobs. At the moment, their access to education and health is very weak in India, so we need to increase that. But unfortunately, during the pandemic, what happened was that initially the expenditure on health was increased, but then when the pandemic sort of came down a bit, then the health expenditures were reduced, and education expenditures were also reduced. Employment generation expenditures were also reduced. So as Matthew was saying, there was inadequate access to funds for recovery as far as the poor people are concerned. All those funds were focused on businesses. So the increases took place, where, for instance, in urban infrastructure and so on, which were meant for businesses, but not for public funding of the social sectors and so on. So in a sense, the pandemic was used as an opportunity to push for more pro-business policy rather than to push for more pro-people policies. So what we call in India the supply side policy were emphasized as compared to the demand side policies. So, for instance, the amount of funds allocated to the poor people was hardly 2 to 3% of GDP, whereas what was required was at least 7% of GDP for the poor people, whereas the funds that were allocated to the businesses, those went up very substantially. Already before the pandemic, the corporate tax rates were cut to enable businesses to be able to invest more, but that did not happen. So even though very large concessions were given to the corporate sector in terms of corporate tax cuts, but that did not lead to increased investment because demand was inadequate. So again, from the macro point of view, businesses did not do well, and our rate of growth of the economy fell from 8% quarter on quarter to 3.1% before the pandemic. And as everybody knows, it declined further, and we still haven't recovered from that pandemic. So in a sense, the policy reorientation is very essential, but pandemic was used to actually, do more pro-business rather than pro-people policy.
And for Matty, which is up here, how do the flaws in the international tax architecture impact human rights, and what kind of reforms should we push for? It's a big question.
Yes. Thank you. That's a really key issue in terms of the human rights compliance of also the financial sector. It's estimated that illicit financial flows, so financial flows that are cross-border in nature and that abuse or break laws, are of the scale of 119 billion to 183 billion in the Asia-Pacific region, again, according to a recent study by UNESCAP, just based on one single flow, which is measured as trade mispricing. So the mismatches between import and export prices, and that's kind of a proxy for capital leaving the region or capital circulating through secretive tax havens where they can hide either the ownership or the identity of the owner of that money, and either evade rules, regulations, or taxes in that process. It's also estimated that corporate tax abuses contribute to billions. It's not clearly estimated how many billions, but tens of billions in tax revenue losses in the region. Just to take one example of those kinds of tax abuses, the sale of a large telecoms company in Nepal, Ncell, from a Swedish-Norwegian company, Telia, to Axiata in Malaysia, resulted in an unpaid capital gains tax of about $300 million. And that was because a law on capital gains, so the appreciation of the value during the ownership of the company, is subject to a tax. That's capital gains tax. And that was the company who sold it said that, oh, that shouldn't apply to us because we have a double tax treaty with our parent company, Norway. But then there was a public litigation case, and it was won finally in the Supreme Court after many cases, and it was considered that it should be paid. And then the new owner had to pay it, and Nepal is in litigation with the new company for that. So a lot of the international treaties don't actually help the realization of domestic resource mobilization or tackling illicit financial flows. So the international tax architecture in itself, whether it's tax treaties, whether it's investment treaties, and indeed the very ways in we tax multinational corporations, is quite unequal how it's set. It's set at the OECD, which is the Organization of Economic Cooperation and Development, which is an organization of high-income countries. So actually, most Asian countries are not there adequately at the table when these decisions are being made on how corporations are being taxed. And there's a demand by Asia-Pacific members of civil society, global civil society, to make sure that those rules are set at the UN. And it should be, therefore, that we campaign and we advocate and we talk that the UN should be the norm-setting role. UN only has an expert body on discussing international tax issues, but it doesn't have a political body that sets the rules for taxing large corporates or to set tax treaties between nations that actually regulate the taxing rights between nation to another. And therefore, global North countries often have more taxing rights, and they have certainly more power in setting international tax rules. And so we say that it should be based at the UN where these are. And there was a resolution last November at the UN General Assembly that the UN shall start negotiations towards the UN's role in setting international tax norms. So we wait in that case the report of the UN Secretary General. That's a major step forward. And it's been also supported by countries in the Asia-Pacific region through the G77 group that's put that forward, and it was led by the Africa group in the UN. I'll just say also that secretive company ownership is a key vehicle for this, and we did a study on illegal, unregulated, and unreported fishing, where the global estimates are between 20 to 36 billion a year in losses, and a single Asian country, Indonesia, is estimated to lose 4 billion a year in IUU fishing. And that's partly foreign vessels coming to Indonesian waters or unregulated, unreported vessels taking fish out of the waters without the proper declaration of what was done or violations of rules that are there. And we said that one contributing factor is the secrecy. We don't have ownership registries of vessels. We don't have company ownership information that would allow authorities, and if it's public, civil society, to actually play a role in actually watching over some of these illicit trades. Thanks.
Just a little caveat, then I'm playing a little bit of a devil's advocate here. Usually it's the private sector that is, the culprits for this tax evasion and lack of financial transparency and accountability. And we also work on these issues as Fair Finance Asia across the coalition. But very interestingly, in Asia, there are very corrupt regimes, and there are regimes that, of course, some people would say, please don't support the continuance of these types of regimes. And one way to do that is probably to starve it to the core and try not to, pay the taxes. And some time ago, there were calls when the coup started in Myanmar for, private sector organizations for the taxes not to be going to the military government. And this was quite a very weird period for the private sector, because usually they would be forced to comply with their responsibilities to do that. But many civil society organizations even called on some of them to maybe course their revenues and taxes through other ways. And I'm not making a value judgment whether this is a good approach or this is a bad approach. Of course, some people would have a really strong opinions about that. Perhaps Matti and his organization was also have but I just wanted to spice up the conversation a little bit, that some of these type of issues do come up, and we do, you know, have these type of questions as well.
Right. Any other question in the room? Anyone? Okay. None here. Okay, I have one for both of you because we've been discussing a lot about the informal economy, and in context of Asia, that is a huge part of the economy. Women are a huge part of it. A lot of them are self-employed. So how do we talk about the financial instruments as well as banking in context of this? So there's, of course, financial inclusion that we have spoken about. But what does this grayness do? Like, does it aid the kind of tax evasion that is happening? Or have they started speaking to each other? How do we bring the informal sector within businesses and banking? How do we link these two? Are there any examples that you would like to share?
I can maybe start on this one. In 2020, Fair Finance Asia, we worked on a research specifically looking at the agri sector, which is in Asia in general. This is one of the biggest employer, and a very big part of this sector is actually considered an informal economy, the what you call gig economy. And more specifically during the pandemic, which is part of the data when we released the study, looked at how this sector was impacted by the pandemic, of course, due to migration, due to the limited mobility during that period. And many businesses realizing how big of a contribution the informal sector and labor is actually bringing into their businesses, and how limitations brought about by the pandemic could really create issues for their businesses, and therefore, thinking more consciously about how this impacts their labor policies. And this is really a very important consideration, especially from Fair Finance Asia. We highly, of course, recommend and advocate for financial institutions to include the highest possible labor standards in their policies and in their practices, and to ensure that informal labor is, formalized or compensated fairly. And obviously, this is something that needs to be done in continuous engagement with the companies that are, of course, being financed by these financial institutions, because a lot of these companies are operating in national contexts that would have not very good standards and not very good labor laws, and that they are using that as a way to also justify why they are not providing proper compensation or providing proper payment to those people that are in that sector. So I think it's both ways. While we advocate for the private sector to improve their policies and practices, unfortunately, we still don't have any mandatory regulations that would, make them ensure that they are complying with this 100%. And therefore, the other call would be on the other side of financial regulation to improve the policies for human rights due diligence, including that, and including greater standards for them to really supervise these financial institutions, especially on issues that impact labor and specific sectors that have, very big informal labor or informal sector participation.
Can I come in?
Yes.
Yeah, if we are to talk about what we call the unorganized sector in India, it is slightly different from the informal sector. The unorganized sector employs 94% of the workforce, of which 46% is in agriculture and the rest are in non-agriculture. And the incomes are way below the taxable limit. The taxation begins at about 400% of the per capita income. So most of the income of the unorganized sector or the informal sector are way below the taxable limit. So they are not the ones who generate the black income. The black income or the underground income is generated in the organized sector, and not the unorganized sector. Now, also we must realize that the agriculture sector is not taxed. Therefore, it is not generating black income. It's used to recycle black income from non-agriculture to agriculture, but by itself, it does not generate black income. So that we have to be careful about. The second point is that in industry, we have 6,000 large units, we have 600,000 small and medium units, and we have 60 million micro units. The micro units are really tiny. So it's the small and the micro units that constitute the unorganized sector. The employment in the micro sector is 97.5% of the micro, small, and medium units, and they are 99% of the medium, small, and micro units. Therefore, to digitize this micro sector is almost impossible because they are too small to be actually digitized or formalized. Therefore, what we do is we actually do damage to the micro sector when we actually try to formalize them, because they cannot be formalized. They work in cash. They do not use banking channels, etc., because they're too small to actually do that. For them, the cost of going to the banks, etc., is high. Therefore, they use informal money markets and so on. So I think the problem is quite different in India than maybe in the medium income countries, the better off countries. Say it may be different in Malaysia and Singapore and so on. So we need to look at it very differently. As was said in the beginning, Asia is not one homogeneous whole, and therefore we need to look at separate kind of policies. Now, what is it that the micro sector needs? Because only if we generate more and more micro sector will the problem of unemployment, especially the problem of women, will get taken care of. So we have proposed in our report on unemployment, but we need to give them finance, we need to give them marketing, and we need to give them technology support. And that needs to be done through the cooperative sector. So they have to be corporatized. Like, for instance, the textile sector, the carpet sector, in the leather goods sector, and so on, where they are in large numbers. So there are many such areas where they need to be corporatized so that they can be given facilities through the cooperatives. The financial sector by itself will not be able to cater to them. Therefore, separate kind of things need to be done for these sectors. Now, one more thing I'd like to mention, and that is the shortage of capital in India, partly a result of flight of capital, because in our estimate, 60% of the economy is black economy, of which about 10% goes abroad and 90% remains here, but that is outside the government sector, and therefore the development funds become short. So what we need to do is we need to look at the problem internationally of flight of capital and the decline in the tax rates. So what is called the BEPS, the base erosion profit shifting, that has become very important, on which even the advanced countries have been worried about. And also this race to the bottom, with the direct tax rates coming down because we compete. So a minimum global tax rate for corporate tax and for income tax may be required. And I think the US has taken some initiative. And as Matty said, the UN has been taking some initiative, but those need to be strengthened so that we can then maybe do something on both BEPS and so on. So India has been suffering as a result of this flight of capital and the globalization of capital. So we need to address that problem as well. Thank you.
Yeah, I'll be very brief. I mean, indeed, whether it's the tax evasion or illicit financial flows, that's not coming from the informal sector. It's vastly coming from capital flowing out to tax haven secret jurisdictions and then coming back in as foreign direct investment and accessing some of the benefits, exemptions, and those kinds of tax breaks that enjoy foreign investments. That's the vast majority of illicit financial flows, together with natural resource crimes, together with some of the criminal economies that we see. So it's largely large corporate, and them abusing, going around rules that are illicit in nature. Yeah.
Thank you so much, Professor Arun, who's online with us, Bernadette and Matty. Thank you so much for all the inputs. And it's a little bit of a hard session to kind of like put together. But since we have spoken of what the financial institutions can do, are doing, and are not doing, things that are mandatory and are in the gray area, including the role of state, and which is it is diminishing in many ways, like Professor Arun said, and it needs to now, whether we have to fight for more control from the state or whether we need to reduce private interventions, these are things that have to be discussed more and are being discussed by many organizations as both FFA. The one thing I wanted to add, and that is something that I have been both working on and been thinking about, is one of the players in the room are the people themselves. When we speak about collectivization, I think we have to, speaking of both gender equality or whether we are speaking about labor, there is a power in that, and that work is happening. Many organizations are doing that kind of work where they're building people's power to understand their agency, which is a difficult thing because oftentimes the norms that we work with are really have been historic, right? And it is hard to step out of those. And speaking as a woman, I can say that, like, it's not easy to step out and see yourself when you are you are yourself kind of involved in replicating those gender norms. So same goes for labor. And at the moment, there is the International Labour Conference going on where people are advocating for right to collectivize. And there is a power in that. There is a power in talking about right to fair wages. So while there are these financial institutions along with state that are creating indicators as well as demand from the financial players as well as others in the business and promoting human rights from that, that giving them that push, there is a need to continually work with grassroots organization. And when I say grassroots, it means both women and workers, labor, and many other groups that need that kind of push to create this larger enabling environment. It won't happen with one kind of push that is that we spoke about in this room, but I'm sure there are larger discussions happening across rooms in this building itself. So thank you so much for being part of this, your inputs, and just listening to us, and hope we can work towards a right-based economy. Thank you so much.
Thanks a lot.